I would like to just start off with the US yields here. We know that the 2-year yield's been sold off quite strongly, but the 10-year yields here, we'd been looking at wave 3 here with an A wave, ABC for the B wave, and then 5 waves down here. So we've got 1, 2, there'll be a 3, 4 in here and a 5. So we've probably got the low in here for those yields at the moment. So the 2 years will probably rally back off their 5% where they dropped off, and yeah, so that's where that is at the moment. And I just wanted to have a look at this is China, so we don't need to go there. I just wanted to have a look at some of the volumes in here. I think that's the low volatility. Yeah, this is quite interesting really, because just bear with me a second. I'll just put it on the hourly chart here. That might be probably too... oh no, that'll be okay. So we can see that the low volatility S&P index here, it's it hasn't really made any new lows, so it, you know, you could view it as a building process to the upside, but it does have overlapping wave structures. So this is kind of one of the weakest, but that's not really what I wanted to look at. I really wanted just to have a look at the volume on some of these things. So this is the S&P index on the daily chart here. Look, I've been looking at a bullish count and a bearish count for things, as you know. So this is just the bullish count on here. So I mean, while we're here, you know, if I get a really nice tested support on top of the 4,000, well, then we'll look at, you know, continuing to the long side. We're currently long at the moment, but we'll look to be... anyway, we'll talk about that in a moment. We can see that there's nice volume here, but a lot of this volume here on this side is related to this downtrend here, increasing volume in a downtrend here. So we really need to look at this side of things here. So we haven't seen a great... I mean, we've seen quite a lot of volume, but the trick is that with volume, it's the relationship between the volume bar and the price bar. And when you look at the price bar, it's where it opened, the range, and where it closed. And then when you're reading the volume, it's this bar's relationship to the previous bar. That's all. Okay, so we would have had... I think that I'm not in tune when the rollover for the futures is, but this is probably something to do with that at that point. When we have a look at, this is the index futures, we'll just come back to that, the ES here. So the mini futures here, we can see that the move to the upside here has got diminishing volume on it. So this one's lower than this one, yada yada yada. So it's not promising to the upside in terms of volume coming into the market, you know. I'll just check on these ones here. It's the same here as well. So basically what we're seeing is we're seeing a trend to the upside that is not being confirmed by the volume. So price and volume is pretty much the basics of analysis. Of course, we run 3,000 indicators over all of these things to help guide us, and that can be comedy or tragedy. So we're not really seeing that volume come in. That's kind of what I'm talking about here with that. So that's interesting. So I'll leave that at that for the moment, and we'll come over to the S&P. Now, we know that the you know, the tech sector is quite strong, right? So this is the tech sector here. This is just, you know, all the big boys here. I'm looking at this as an A and a B and 1, 2, 3, 4, 5 up here to the 50-60%, and then failing from that point. We're counting 5 waves up here. We'll take a look at that. Of course, I can turn this into a bullish count. You know, any 5-year-old can do that. But what we wanted to do was, well, if this is I mean, this can be counted differently as well. But the main point here is that if we count 5 waves here, and that tops out here on the NASDAQ, that'll be the 13,000. If that after these 5 waves here, If we make a high above those five waves there, well, then we're in another sequence to the upside. We'll have to look more bullish at that point. But what we need, what I've been saying this week, is going to be up. We'll probably get the turn on the funds rate coming out tonight. So not tonight. Well, for me it is, but Wednesday midday session, 2 o'clock or something. So then we'll start to pick up. We will look at this and say to ourselves, okay, well, do we have 5 waves up here? Is it finished, or this is just the Fed's thing was just a little 4th wave? We've got a 5th wave to go here, and then we need to rinse and repeat and look at it like that. So we've got to kind of work over here. You know, we've got to stay away from the Fed noise, and we need the dust to settle, and then we need to pick up the golden thread through this story, and then move with that. So it's going to take a little bit, you know, and we're going to be a little bit blind for a moment or two in that process. But the point being is that after 5 waves here, anything above that, and we can continue on our journey to the upside. But we need to get past this hiccup, because as an ABC here, that can come down further. And of course, the banks are driving that further, and these are the big boy banks here. And we've been looking at the regional banks, S&P regional banks as well. That's even weaker. But the thing here is that this is the whole picture here from the top here. So yeah, I mean, the thing here is that's the low. Whatever count that you want is fine, but look, that you have to agree that that's the low. Then from the low, we've had a 3-wave move to the upside. So as soon as this drops down below this one here, it makes this a corrective pattern. And that being a corrective pattern should take out this low here. So then we come over here and we look at this, and we can see we've got a nice little 5 waves here for 1 and 2, and this is the big and long and strong. So there's got to be the 3rd wave in here. This is all complicated, so this has got to be the 4th wave. And we're going to be quite close to a low here. So yesterday we were looking for a bump in this, and we continue to see that bump, and then there's going to be a bit of a drama getting through to the other side over here on all of this. But I expect it to come down further. So, you know, the banks have been, you know, they've been shoring up here with the, you know, the Feds and the Treasury and, you know, the government, all that sort of taking responsibility for their own own paper, own worthless paper. You know, it's their responsibility. As I said, you know, it's their paper, it's their money. They licensed it. They put people in charge of it and gave them licenses. They need to monitor that, which they failed to do. They need to protect people's money. It's their job. You know, it's their responsibility to, you know, but that's going to cost them trillions of dollars. Now, as I mentioned with all of this in the beginning, is that, you know, there's going to be more, as always, there's always more skeletons to fall out the closet, you know. But I don't see this finished, you know. Now, obviously, the SP500 is carrying this, where the tech sector's not carrying this, you know. So we're seeing Apple and all those move up. You know, you can watch the video for those. You know that we're sort of topping in a lot of those things, so we need to watch them top later in the week. But the S&P is carrying, you know, the banks as such. So it's not looking as chirpy as the other guys, you know. So yeah, that's pretty much it. But so we have to wait for these to top out, and you know why these are topping out, and the discussions with what they're going to do with the banks and all of that sort of stuff. You know, the retailers like that, but as we had a look at the volume, we're not seeing any commercial money come in on this, you know, on this low, this move up here just yet for the S&P, you know. So it's possible, highly plausible, that the banks can move to the downside. So that's going to put weight on, you know, because the NASDAQ's taken out this top here, you know, where the S&P's still here. It's not to say that it can't catch up, and, you know, I've got this as a bearish count in line with it. If I find you know, from the low here, if I can get a nice 5 waves up here and get support on top of the 4,000, well, then we'll turn bullish at that point, and we'll have a look at the bullish count. It's not a biggie, but as I mentioned yesterday or the day before that and so on, is that we're just interested in the trade. Now, we don't care if it's long or short. That's not, you know, we're not emotional about that kind of stuff. So I pointed out that it would be the short trade that would arrive first before the long trade. So our focus has been on the short side, and that will be the same case. But today, but at the same time, we want to be aware. If we're going to go short, we want to know what the long trade looks like, and if we're going to go long, we want to know what the short. We want to know the risk. We want to know what we're up against here. So if this is correct here, then this leg here down to here, this length here would be one side of the trend, and this would be the other side of the trend here. A little bit of equality between wave A and wave C, if that was the case. Now we could look at it like the banks and go wave 1, put B wave here, A wave here, B wave here with an ABC, and look at it the same as the banks, the wave 1 here and 2 here, in line with the banks, so to speak. Or we can just take it on its own merits and put it wave B over here. Either way, it doesn't matter. We'll still end up coming down. We can count this down as 5 waves here. That's possible. And then we've been looking for the rally, which is the 61.8%. So we'll go from, I think I could have this on the daily chart. This is a weekly chart here for this. Not seeing much volume in this bar coming up here either, but this is a CFD platform, so it's a market maker. So they need to make their own market at times. So probably not good to look at their volume, and a lot of the market makers, especially, and the same with the FX as well, when they're showing volume, it's not so much the volume that you're looking at, it's not really the volume that you're looking at, it's how many times the price has changed in that period of time that you're looking at. So don't get confused with that. Where are we here on one day? So this makes it a little bit cleaner. This would be the bearish count. So if we looked at this as wave 1 down here, which I kind of struggle to do that a little bit, but anyway, and then coming back up to the 61.8%, which is kind of up around the 4,050. So it can go up there, but we're in no rush, because what goes up will come down, and we know that whatever pushes up here will come back and check. And the breakout, like here, the breakout's important, but the retest is more important. So we need to see if the retest holds on this level or doesn't hold. And when you've been looking at this, as I've mentioned before here, is that all of this here, it's not a triangle pattern, but basically it's been there's been a big battle going across here, so it's getting tired now, and it's either going to it's diminishing into this number, and it's either going to find it as support or resistance. And if you're patient enough, you're going to get to see that, and then you're either going to move up or we're going to move down in a very broad sort of sense with that. But the so in the meantime, from this little leg here up to here, we're counting 5 waves. Let's just go in and have a look at that on a little bit more detail on the 50k tick chart. So this is it here. So we're looking at this as an A and a B and a C here for the A wave, and then we were looking for the 61.8% pullback for here, and then we're looking further up here. You could count this in different ways, don't get hung up on that. This 5-wave structure up here is more important, and the target at 4,050 roughly at that point. Also, when this moves up here, we need to have a look at the bank rally, we need to have a look at Apple, Amazon, Nvidia, Meta, Google, Microsoft, and so on, all of those, and then we get a consensus on all of those, because they can all be slightly different, but we get some sort of consensus, and we can say, okay, well, because tops and bottoms don't always complete nicely in Elliott Wave. The bigger ones will drag the market around a bit more. If we were going to go long here at the 4,000, we would need a pattern like this here. We would need we'd need support on that level, and it'll be like this here. So we've had that. We're in over here somewhere at the moment, I think. So we're pushing up to that 40.50. Then we'll need to have a pullback at that point. So we start from the top for the long trade, then we come down to here, then we come down to here. If we can work out before that we're bullish, then we'll start building in from down here. But we need all this to play out here. We've got the Fed's fund rate coming in at 2. So that's all going to be very volatile. We don't want anything to do with that. So we're just going to give that a wide berth and see how the dust settles on Thursday, and see if we can pick up some sort of direction on the Thursday and see where stocks are at that particular point in time, because they're driving this, and the S&P is just a moving average of all of those sorts of things. So yeah, we need a nice support before we can go long here. As I mentioned all week, we can trade up to this number and then get out, and then we're just going to wait. We're going to wait for the long trade setup, and we're going to wait for the short trade setup. Now, at the worst case here, if this goes up here and becomes bearish, well, then it's going to drop down. It's going to drop down into here somewhere, isn't it? And bounce back. And in that drop there'll be 5 waves here. And then it'll have a retest back up to 61.8%. That's going to leave us with an exposure on wave B here to go short the A, the B, and the C here. So we can look to go short at that point. So yeah, we'll go in and have a look at the intraday in a moment. But yeah, I was talking about this morning with the dollar. So I just want to bring the US dollar over here. Now, this move down through here, some of it can be counted quite easily and nicely, and it makes it all easy and peasy, and then other parts of it are a bit complicated to count. So some folks have it down here as a corrective wave. I've got it down as an impulsive wave, and I've been looking for an A and a B and a C wave back up to this point here. I've got it as an impulse wave too, because it's what I see in the reverse image of this with the euro, dollar, pound, and Aussie in that. So, what we're looking at here is that if this is correct, I mean, when a wave 2 pulls back, it can pull back 40%, which is around the 105 here. It could pull back 50%, which is the lower end of this box, or so 40, 50, or 60% basically a wave 2. I mean, it could pull back 80%. Sometimes it hits the 61.8% or the 78.6, and everybody goes, ooh, but I don't know why that is. But I know that a corrective rally can pretty much do anything it wants. It's not like it's been very strong in here as well. It's been quite sort of weak. So we've got 2 counts here. We've got a count that can have, because the markets have been following this too, which I'll point out in a moment. So we can have wave 2 here as an A wave here, and a B wave here, and a C wave up here for wave 2, and then this would be down for 1 and back for 2 and down at that point. Now, if that's going to be bearish, then that's going to make the S&P and all the rest of it stronger at that point. So yeah, just looking at this, we're just going to have a look at it on its 2 counts here. So this will be the ABC pattern here, and I just want to, so you just understand where the turn is, so we can monitor the turn, because it's going to be when this bottoms out here, the S&P will top out basically. So this move currently up here is an A and a B and 1, 2, 3, 4, 5. Yes, there is a problem with that with overlap, but I'll just be a big boy and suck that up. But otherwise, wave A here, then an A and a B and a C down to here, and that brings us down to the 102.50 at the 61.8%, and we'll be counting 5 waves down there, where we have been. I won't go into it on this video, but expect to bounce off that low price point there. Now, if that moves up there, then if we look at this situation over here with this here, while this has been coming down here, this has been going up here, right? So when that tops and turns here, then we're going to get that turn here. So if that gives us an impulse wave up here, that's going to help confirm that we're going to move down at that point. But what I find interesting is that, let's just assume for a moment that this pushes up here, right? So if that pushes up there, it may or may not happen. We need to talk about the bearish count in a minute too. But if that does push up here and then turns at this particular point here, that's going to make the S&P come down while that goes up here. So the S&P will come down wherever it comes down to, and then if this moves up here and then turns down lower here and then has that big trend down from wave 2 all the way down here, that's going to push the S&P up. So we're going to keep an eye on that particular plan as well with that, so that we could just, instead of coming down totally bearish down here, we might just come down a little bit. And this would actually suit stocks like Tesla, Nvidia, Apple, those sorts of things. So that's a possibility. So I'm going to keep that in mind. And I could probably work that into the banks as well. The other count here is that if I go to the 10K here, and in this case we look at this as the rally currently is being completed from wave 1 and ABC for wave 2 here, then 1 and 2, and then this little move down here. As I mentioned, I won't go into the intraday, but that's, you know, the low end here is where it's at. So we could have a rally here and then come down at that point. But if we come down here, that means that we're just going to have a fluff around here and then continue to the upside up here. So yeah, these are the sorts of things that that could be quite helpful along the way. I think it's important not to have opinions, but to gather the facts as best you can, and then do what you need to do in terms of trading at that particular point. For me to be long, I can count this up as an impulse wave here. I mean, I can look at all of this here as we have done as a bullish count here. That's not a problem for me. So wave 1 here and 2 here, and then wave 1 and A and a B and a C for wave 2 here, all fits perfectly nicely, thank you very much. And then look at this as 1 and 2, a little bit odd through here, but an expanded flat for 1 and 2 and 1 and 2, building up for wave 1 and back for wave 2. And this is where the US dollar will come in at this point. So we can match up this with the US dollar in its rally while this is pulling back. Here, this one here will be doing this here, you know. So we'll get that timing. If that's going to be the case, that's where we're going to be at that point. Okay, yeah. So anyway, off track but important stuff. In the meantime, we need to understand this little move here. So we've been looking at the bearish picture because that trade will come first, and in that case, we're just going to get a bit more data in here. So this is the the low down here that we've been working on. Like I said before, you can count this up here any way you want, right? I mean, I can count it bullish, I can count it corrective, you could count it WXYs. I always prefer to go to the ABCs because, you know, there's a lot of new people learning Elliott, and anyway, it was Corrective that brought in the X wave, and I prefer to keep it a bit more, you know, traditional, let's say. Anyway, the thing is that we've got, this is the A, the B and the C, and then we were looking for the ABC back into the 61.8%, and now we've got the 61.8% up here that we're gunning for. Trend lines are good until they're not. Yeah, so this is where we are really, and from wave B here we're looking up to wave C. Now I had a bit of a look at this, and you could probably count this a little bit differently, and I didn't get a lot of time to mull this over a little bit, but I'm thinking this is sort of where we're at. It doesn't really matter at the moment, really, because I can tell you, you know, Apple and that need to move up a little bit higher. So this will be 1, 2, 3, 4, 5 up here for the third wave. Fourth wave here, which will be a good excuse for the Fed's meetings, I suppose. And then, you know, a couple of spikes for here for all of that. So we have to wait for the Fed thing to finish off, and we need to let the dust settle here and all of that sort of stuff. So if you're long here, you need to be out of the market at, you know, I'd be out at the 4,000 as I said before, but I'm going to take that off. So the thing is that, yeah, you don't want to be in the market while the Fed is there. You don't want to turn a winning trade into a losing trade, and you need total control, not being an egotistical maniac, but easier to control a winning trade than to recover from a losing trade. So don't be too greedy. But that's where we are. So that said, enough waffling. I'm just going to quickly move into the other market. So the NASDAQ here, we can look at this being bullish. And when you think about it, this move down here is the same as the S&P. We've got that as an impulse wave, but now we're testing the tops here, and we need to be counting 5 waves up there. We're looking at it as a bearish pattern, so we're looking at this here as a WXY over here with an ABC up here. You could count it completely differently. It doesn't really matter. I know that from looking at all the tech stocks and yada yada yada, we're just looking for this 5. We've been working this 5 waves up here, and yeah, we need to understand that. So based on that, we're going to go straight to the intraday 1000 tick, and we're going to look at it in 2 different ways, unfortunately, so there's one situation where we can look at this as from the low here as blue wave 1 here, blue wave 2 here, blue wave 3 here, blue wave 4 here, and then we got blue wave 5 here, and we got 5 waves going up here, and that will be the top at that point. So it will be like that. The other count here is a little bit different, where we have blue wave 1 here and blue wave 2 here, and then we have from this leg to this leg, we go all the way up here to wave 3, then 4, and then 5 into the 13,000. So basically what we end up with up here is we end up with 2 situations that can unfold, and these 2 situations, I'm getting them like this blue wave 3 and 4 here. I'm getting that in Nvidia, and I'm getting that in Google, but all the other ones are just telling me that we got this little trend here to move up, and we're done at this top. So the important point here is to always be conservative, and if you're long in any way, 13,000 is the target. 12.8 is 8's always a profit-taking number, so expect the bids to be smashed at that point. The old high over here is roughly around the same as this. So yeah, in this wave, so here we've got either green wave 4 or blue wave 4, and we're counting up here as 1 and 2, 1 and 2, and blue 1, 2, 3, 4, 5 for the 3rd, 4th, 5th. So this is what we got here. Now this can be the 3rd wave here, or it can be the 5th wave. It could be either one of these. So this over here is just something that Google and Nvidia may need to go through, or maybe I've done something wrong or something. But yeah, the Fed have got their thing at 2 o'clock. So get out of your long trades at 1 o'clock or 1:30 or something, and then just stand aside and let the dust settle, and we'll try to understand it at the end of the session tomorrow, and then after the next session, and then I think like Thursday and Friday, if we can get some inkling of what's happening broadly across the stock market, or the big tech stocks and the banks and those sort of things, if we can get to some consensus, then should be able to build in, maybe on the short side, if we're seeing, at the moment we're seeing impulse waves to the upside and corrective waves down to the downside. So we're in a bullish trend at the moment. I'm calling it a corrective rally, but it's a bullish trend. There's no evidence of a turn down at this particular point in time. So that's the NASDAQ, and the Russell here. So counting the Russell down here, I can count it in 2 different ways. So it could either end up as wave 4 here, the 38.2%, or we can count all of this down here as 1 and 2 here, and then green wave 1, 2, 3, 4, 5 for the 3rd wave, the 4th wave, and the 5th wave. So we kind of end up what the banks are doing at the moment, So we could get another rally up here. There might be some really good news coming out, that they're saving the day again or something or other, I don't know. We'll see. This will be a little 1, 2, 3, 4, 5 here, but they'll take you to the 1800. 8's a profit-taking number, as you can see before, but testing it around here the second time, a bit of the wind will be taken out of the sails, so it might move a bit quicker, but not interested in it at the moment. Okay, so doesn't matter at this point in time for trading it. We need the rest of the markets to pull into line. And the Dow Jones here, this is a daily chart. This is the bullish count here, which I kind of like, really, the wave 1 here with the A wave and the B wave. And I prefer this as a B wave rather than a wave 2, because wave 2s are normally simple and sharp. You know, B waves are like wave 4s. They can be simple, but most of the time they're complex. So as an A and a B and a C down here, I think that's fine, you know. But we need, you know, a nice impulse wave that we can get our, you know, mind into, and then we need some sort of anyway, we can look at all of that in later. So on the bearish side, we're on the 50k, and the bearish side is 1 here and 2 here, and then down for 1 here and 2. So this is very much like the banks, actually, this particular count, especially BAC as such. So with this 1 and 2 here, this will be like BAC over here, Bank of America, wave 1 and 2 here from the B wave, and ABC for the B wave, 1 and 2, and then we're looking at 1 and 2 here. Now, you know, looking at the US dollar, we could look at it like 3, 4, and 5 and finishing here as well. So I can work that count. So 1, 2, 3, 4, 5 here. That would work nicely with the US dollar, by the way. But when I look at the regional banks, S&P, you know, there's a bigger problem on the doorstep, but we won't go there. But just pointing out things, that's all. So yeah, as a bearish count, as far as the crow flies, we're looking at. Let me just double check that. A little bit illusionary there, but yeah, I thought that was a little bit low. So that needs to go there. We can pop that up there and up there. That's a bit better. But basically the same count as the other guys, you know, a little bit different because we actually had a low here on this one, but the A, the B, and the C wave up. So we've got to count 5 waves up here. That's your job. So within that, we're just going to go to the 1,000 ticks here. And I had a bit of a crack at this, counting the 5 waves here, but if you could have a look at that. I got this here as 1, 2, 3, 4, 5 for 1 and 2 here, then the 3, the 4, and the 5 to make wave 1 here. It doesn't look right to me, so maybe if somebody's into this market, spend a bit of time on it. Then 1, 2, 3, 4, 5 for 1 and 2 here, and 3, 4, 5 for the third wave. So as far as I can see, we would be 3, 4, and 5 here, something finishing like that, you know. And I can tell you, you know, if once the Feds say they're 2 cents worth, then, you know, this is all going to get really messy here, I would imagine, you know. But we need to let the dust settle. We need to pick up that thread and see if we can see impulse waves to the downside, and then find a way in at that point, you know. That's that. Alrighty. Thanks for putting up with me. Very brave of you. Alrighty. Cheers.